In cities across China, crowds are returning to grocery stores, restaurants are filling back up, and malls are reopening for shoppers, many without masks. Everywhere there are signs of a nation and an economy that's leaving the pandemic in the past.
With nationwide efforts, our country took the lead in containing the pandemic, resuming work and production, and was the first to achieve positive growth in the economy.
China may be where COVID-19 originated, but it's the only major economy to expand in 2020. GDP rose 6.5% in the fourth quarter of last year, beating analysts' estimates. That was faster than the previous quarter's 4.9%. For all of 2020, the world's second-largest economy grew 2.3%.
The general state of our country's economy in the long term is good, and this will not change, and this is very apparent.
China owes its recovery to its factories. Government stimulus measures were focused mainly on reviving the manufacturing sector, and it's paying dividends. Industrial output rose more than 7% in December.
Our research and development and marketing personnel actively made innovations which greatly enhanced efficiency of smooth communication with clients amid COVID-19.
But China's reliance on selling products to other countries could be a weakness. The IMF says the pandemic's long-term impact will cost the global economy as much as $28 trillion. And officials in Beijing say China's good fortune will be short-lived unless the rest of the world catches up. Paolo Montecillo, TRT World.
Well, for more, let's bring in Jameel Ahmad in London. He's the Director of Investment Strategy at the financial technology firm NAGA. Welcome back to the program, Jameel. Now, impressive figures coming out of China and a remarkable turnaround from that historic contraction that we saw in the first quarter of last year. Can you tell us more about what's behind these impressive GDP figures out of Beijing?
Absolutely. So we did see the weakest economic growth on headline for around 40 years in China, but generally it was the only major economy in 2020 to grow as well. So you've got a bit of a give and a take situation there. But overall, what we do see as well, that China's share to global GDP grew by 1% in 2020, which might not sound like a lot, but when you consider it was only 1 year and you got 1% higher global GDP contribution, actually that's a significant amount. Overall, what's actually helped the Chinese economy, although there's some weakness in consumer spending, is the longer economies go into lockdown elsewhere improves demand for Chinese goods, because the Chinese economy is much more productive when it comes to its exports than other economies elsewhere, which are stop-starting and going back and forth into different lockdown restrictions. And that's overall weighing on other economies' productivity. That's actually a gain for mainland China.
And before the pandemic, there was a question whether or not China would retain its title as the world's factory as, I guess, workers' wages rose and the yuan strengthened. But it would seem that from these figures, that wasn't an issue at all, that there was still this insatiable appetite for Chinese goods during the pandemic.
Yeah, I think that's pretty much eaten up into the narrative that many other economies have gone into cycles, different cycles, lockdowns, not lockdowns, easing restrictions, going back into a lockdown. Whereas China pretty much had a very strict period where there was very difficult measures put into place, but it managed to exit the lockdowns and largely has not gone into lockdown since, apart from a few localized situations. Where if I give you this sample of the United Kingdom where I'm sitting, just as one example, we've gone back and forth into lockdown measures over the past year, which hasn't helped the economy that much, whereas China's at least had a little bit more consistency. But overall, yeah, we do see a little bit of weakness into the Chinese consumer. But for as long as economies do remain in lockdown measures, and of course, most of Europe, Western Europe specifically, are in lockdown measures now, that's going to be more of China's pie that's going to be able to take its global GDP. And it also presents more opportunity to China to be the number one demand for exports. So if you want goods right now, you're more likely than not going to get them from China, because that economy is showing some levels of consistency in terms of being open or not. Whereas with everywhere else, across Africa, United Kingdom, Europe as well, we don't have that consistency. We just simply do not have that foresight to see what's really going on and whether you can get those goods or not.
Yes, and before the pandemic, it was the US-China trade war that weighed heavily on the minds of investors as well as policymakers in both China and the US. But as Washington prepares to inaugurate Joe Biden as its next president, what do you expect to happen to that dispute? Can we expect it to cool down a little?
Oscar, the trade war seems like a lifetime ago now that we've had this pandemic. Essentially, when it comes to Biden, I think what the market's looking for and what investors want is a consistent narrative of unity and the need for globalization after what has been 4 years of very much unprecedented uncertainty, not just because of the pandemic, because you've had a president who pretty much can move the market with his social media feeds. That's been how chaotic the past couple of years have been. But as long as we get that narrative of collaboration, need for unity, global economy needs to work together again, we should see a much better, more stable financial market relationship. But that's not to say that some of the measures that the United States took on China over the past couple of years are going to be completely reversed. We still expect for Biden to be pretty strict on some of the tones, but there's going to be much more of a collaborative, let's work behind the scenes to sort out these issues, rather than what we've had is very public feuds and a war of words over the past couple of years at least.
And as we reflect on these positive growth figures out of China, the same probably can't be said about most of the world's other major economies that are currently battling a resurgence of coronavirus. Are you expecting some grim GDP numbers from other major world economies?
Yes, and I think that for as long as the economies, 2021 is pretty much seen the return of lockdowns in most economies, which was something that statisticians weren't exactly planning for the end of 2020. So I do think that 2021 global growth figures will be revised down. But as long as the vaccines start picking up, we'll see a better Q2 onwards of 2021. But I think it's going to be 2022 where we're going to really see a big change. And that seems a long time away, but at least we see some sort of light at the end of the tunnel. But once again, China is going to show more appetite, more success, and it's going to move closer and closer towards returning towards the levels that we saw pre-2020, pre-pandemic, whereas I think other economies, for example, where I'm sitting in the United Kingdom, you've got the worst economic backdrop for about 4 centuries, whereas for China, you see the worst economic backdrop in just about 4 decades. So there's a lot of perspective there, and I think the perspectives for China's economy and the world economy are going to improve in 2021. Won't be as dramatic as 2020, but this isn't a car that's just going to shoot back off the highway. We're going to see a few twists and turns and maybe a few difficult moments here and there as well.
Okay, Jameel Ahmad from NAGA in London, thank you as always for joining us on the program.